We back. Welcome to Breaking Bread Presents. We outside. In this session, I wanted to break down one of my favorite setups using the outside bar or the outside candle, whatever you call it. I want to show you guys how you can identify these same setups and how you can use them to find high probability profitable trades. All right, let's get into it. So, outside bar, or outside candle, is a candlestick pattern observed in technical analysis that signifies potential reversals or continuations in the market. For the purpose of this session, we are only going to focus on the potential reversal side of the outside bar. All right, so an outside bar is created when price takes out the previous candle's high and low. Keep that in mind, the previous candle's high and low, which presents the potential for a shift in market sentiment. So outside bar, if you're not familiar with it, this is what this looks like. So we have our previous candle here. We have our current candle. Outside bar takes out the high and low of the previous candle. So based off candle anatomy, since it's a downtrend candle, we know price opened at the top. We pushed to our highest point. We came back through, created this body. We went to our lowest point, and then we closed at the bottom of the body. But in doing so, price took out the high, creating a new high. It took out the low of the previous candle, creating a newer low. So this candle is outside the range of this previous candle. Now for uptrend, it's the reverse, right? We open at the bottom of the body, we push to our lowest point, we push back up through, creating this body to our highest point, and we close at the top of the body. This high is higher than the previous candle's high. This low is lower than the previous low of the previous candle. So this candle's range is outside this candle's range. We have a higher high and we have a lower low. So we are outside the range of this previous candle. So that's what an outside bar is. Now, outside bar can be found on any time frame and at any moments on your chart. So keep that in mind. Any time frame, any moments on your chart. Fam, real quick before I get into what the setup looks like, I wanted to let you guys know that my new mentorship is starting July 21st. Yes, July 21st. Coming up real soon. So if you're looking to get in on the future side of trading, and we're just going to use price, fibs, and a clear mind, then this is the mentorship for you. This time I'm breaking it down into two different programs. I have my bachelor's side of the program and the master's side of the program. Both are geared to a particular trader. So identify which type of trader you are and go reserve your seat for this mentorship. We are at the back half of the year. We got the back half. We got goals to reach. So let's reach them together. You ready to put in that work? You're ready to look in that mirror to identify the trader you are and the trader that you need to become to reach those goals? Then go ahead and reserve your seat for this mentorship. It's time. It's time. No time like the present. So if you're ready, I'm going to place a link in the description of this video. Go ahead and click that link. Go ahead and reserve your seat. Let's break bread together. All right, so what's the setup? So the setup is you want to find an outside bar at the top of an uptrend, and you want to find an outside bar at the bottom of the downtrend. Now, when you're identifying the outside bar at the top of an uptrend, you want that outside bar to be a downtrend candle. So whatever color your downtrend candle is, that's what color you want that downtrend, that outside bar to be. If you see price, the outside bar at the bottom of a downtrend, we want that to be a green uptrend candle, or whatever color your uptrend candles are. That's what color you want that uptrend candle to look like. So this is what that would look like. Price is in a downtrend. We have our previous candle. We have our current candle. This is a green outside bar. So we know based off anatomy that price opened at the bottom and it pushed down. And in pushing down, it took out the low of this previous candle, creating a newer low. We went to this lowest point. So since we created the new low, we already know that this candle opened as a red candle. It opened as a red candle. Buyer stepped in and said, hey, we like that price. Let's go ahead and push that back up. and they started buying it up. Once price got back above the open here, that's when it's now that red candle has now turned into a green candle. Now we're creating this body. We're forming the body. We're pushing up. We're pushing up. We're pushing up. And as we're pushing up, we take out the high of the opposite side of this previous candle. And we push, we get to our highest point before we get pushed down, and then we close at the top of the body. So this high is higher than this previous candle's high. This low is lower than this previous candle's low. This is an outside bar. This was a once red candle flipped to a green candle. So this is telling us that we tried to go lower and buyers stepped in and bought it up. Since they did that, that lets me know that it failed to continue to go lower. So we should look for a possible continuation back to the upside. This is why I look for a green outside bar at the bottom of a red trend. Bottom of a downtrend, I want a green outside bar or a possible continuation back to the upside. We already failed to go lower. Buyer stepped in, so let's see if they're still going to be in the next candle, the next candle, the next candle. So we're looking for a continuation. Now it's the reverse for a down uptrend, right? We see prices in an uptrend. We have our previous candle. We have our current candle. Based off candle anatomy, we know that this candle opened at the top. So just based off open, we are already higher than the previous candle. So we know this was a green candle. Price pushed up, went to its highest point before it pulled back down. Once price got back below the open, this once green uptrend candle has now turned into a red downtrend candle. We're pushing, we're creating this body, we're pushing, we're creating this body. In doing so, we took out the low of the previous candle as well. We went to our lowest point before we pulled back up and closed at the bottom of the body. So this high is higher than this high. This low is lower than this low. So we are outside the range of this previous candle. This was a once green candle. So that means that buyers were in control and sellers took over and started selling off because that was too high for them. So we failed to continue up. So now we're looking for a possible continuation because sellers have already taken over. We already got buyers out of here. We already got them out of here, and we're looking for a continuation. We already got sellers out of here. We bought it up. So now we're looking for a continuation. So this is why I look for a downtrend outstand candle at the top of an uptrend, and that's why I look for a green uptrend candle at the bottom of a downtrend move. So now let's look at that on a chart. All right, so we have a downtrend move. We have an outside bar. This high is higher than this previous candle's high. This low is lower than this previous candle high. This candle opened at the bottom. It pushed down. So this was once a red candle, red downtrend candle. We took out this low, creating a new low. Buyer stepped in and said, hey, that is a great price. Bought it back up. And then on the move back up, we flipped this once red candle to a green uptrend candle. We took out the highs of that previous range. We moved on up, created that wick, pulled back down, closed at the top of the body. So this candle is outside the range of this previous candle, and we're looking for a possible continuation back to the upside. Now your entries on this candle would be once price got back above the 50%, which is represented by this black iron here. Once price got back above that 50% of that candle, that could be an entry, or a safer entry would be to let this candle close, let this candle open, take out that high, and play it to the upside. Those are two entries that you can take on this play based off the downside. But we want price in a downtrend. We're looking for a green outside bar to play for a continuation back to the upside. Now, for a downtrend move, we see prices in a uptrend. We're creating new highs, taking out highs, we're creating new highs. This is our previous candle. This is our outside bar. We have a new high, higher than that high. We have a low, that's lower than that low. So we are outside the range of this previous candle. Price opened, went to its highest point, came down, went to its lowest point. We closed at the bottom of the body. But we are outside the range of this previous candle. So since we failed to continue going higher, sellers have already taken over in this candle. I'm looking for a possible continuation back to the downside. This is why I look for these setups off these strong moves. Strong up move, I want a continuation back down if I identify an outside bar. Strong down move, I'm looking for a green uptrend candle to play back up to the upside. Again, same thing. 50% of this candle is an entry, or a safer entry is to let this candle close. Once this candle opens, take out this low, then you're looking for possible entry. A stop loss is going to be at the top of this outside bar. As long as price does not go and create a new high, I am staying in this play. As long as price doesn't go and take out the low of this outside bar, I am staying in this play. I'm staying in this play. We're not creating any new lows, I'm good to the upside. We're not creating any new highs, I'm good to the downside. That's what I'm looking for on these setups. All right, so you missed the entry. Now what? Well, wait for the retrace. Retrace, retrace, retrace. We know that price doesn't go straight up, and we know that price doesn't go straight down. So we wait for the retrace for a possible entry. If you're not familiar with retrace, I do have a couple of retrace videos in my channels that you could go check out. But a retrace, if price gives you the opportunity, then place your fibs on the most recent trend and see if you can catch a bounce or rejection, depending on which way you're playing, for a possible entry. So what would that look like? Here we have a strong uptrend. We have our outside bar, previous bar. This high, higher than that high. That low, lower than that low. So that makes this bar outside the range of this previous candle. We have a clear downtrend move. We're looking for a retracement. So to place our fibs with a downtrend, you're going to go from the high, which is the top of this wick, to the low of this wick. So find your fib tool. If you're not familiar with fibs, I have fib videos in my channel as well, to where I break down fibs. But you're going to take your fib tool. We're going to go from high to low, and we're measuring the pullback to catch a reaction to the right to play it back down to the downside. So it gave multiple opportunities to where it got to our fib levels and it rejected. It rejected. Got to our fib levels and rejected. So as long as price does not create any new highs, which is what got us down here in the first place. So as long as price does not take out this high, then trust this play to the downside. There's no reason for you to get out of this play. Don't let these wicks and this price pushing, don't let that scare you out of your play. Remember what I say. I say it's not where price push, it's where we close. Price can push all day, but where did we close at? Where did we close? So trust it. Trust it. So that's how you would use it for the downside. The upside, it would be the reverse, right? So we have a high, taking out this previous candle high. We have a low, taking out this previous candle low. All right, we did it all in one candle. So that is an outside bar. That is outside the range of this previous candle. So we're going to measure the most recent trend before the pullback began. So with an uptrend, we're going to go from the lowest to the high. So the bottom of this wick to the high of this candle, we're measuring the pullback to see if we can catch a reaction back to the upside. So from low to high, see price got to the 38.2 of my fib level, and it bounced right off of it, heading back up to the upside. But again, as long as price is not creating any new lows, then we are staying in this play. There's no reason to get out of this play. If we're creating new highs, then that tells you that buyers are in control. If we're creating new lows, then that tells you that sellers are in control. As long as price doesn't take out the low that got us up here in the first place, we hold this trade. No reason to get out of that trade. All right, here in this example, strong up move. We got our downtrend outside candle, high, higher than this high, low, lower than this high. So we are outside this previous candle's range. So now we're trying to catch a retrace. So we're going to connect from this high to this low, see if we can catch a retracement. And you see price got to that 78 level, which is my favorite fib level. If you're not familiar with that, I do have a video called That 78 in my channel. You should take some time and go watch that. Level 78 level is my last line of defense. That's the last, the furthest I'm going to let price get to catch a reaction back in the opposite direction. As you can see, price pushed to the 78 before it began to pull back. So this is a possible entry for you to take this play back down to the downside. Remember, my stop is up here. As long as we're not taking out the high in this situation by creating new highs, then we are okay. We are okay. This high is lower than that high. So we're good. No reason to get out of this play. Now you probably would have got scared out here, and that's cool, but what is price telling you? Is price telling you we're making new highs and you should cut this play? That's not what it's telling you. So don't let these strong moves scare you out of your plays. Like slow down the charts and identify what price is telling you. We're making lower highs. Lower highs means there are no buyers. This is what sellers like. We like the lower lows, right? We like the lower highs. So you definitely could have took entry right there based off that fib. All right, so Confluence. I talk about this a lot in my videos. Confluence is definitely important. So Confluence is a combination of multiple technical indicators, signals, or trading strategies that are used to identify high probability setups. So what does that look like? All right, so we missed entry here. We missed entry here. We got our previous bar. We got our outside bar. This high is higher than that high. This low is higher than that previous low. So we are outside the range of this previous candle. We missed entry. We didn't get in at the 50% and we didn't take it at the low here. So we're going to connect our fibs from this high to this low before price starts to pull back. And if you look here, price is respecting my purple line, which is my 61.8. My green line is the level of resistance. If you look to the left, we've done this before. So we want to see if we're going to get the same reaction that it gave us before. It got here before, it dropped. It got here before, it popped up, eventually dropped. Got here before, it pulled back. It's getting here again. Let's see if it's going to give us the same reaction it gave us before. And sure enough, it did. This is an area of confluence. This is three things in your favor. You have my 61.8, you have my resistance level, and you have a shooter. That is things in your favor to trust this play back to the downside. You ever see this on your chart and you don't push this button, this is a you problem. This is a you problem. Every time you see this, you should be pushing this button without hesitation. Without hesitation, you should push this button. All right, same in this example. Reversing this example, right? We have a new high, taking out the previous high. We have a low, taking out the previous low. So this is our outside bar, previous bar. Green line is our trend line. Blue line is our support line. This is the area of confluence. It's telling you this is a strong area. So this is what you're looking for on your charts. For me, I only need two things in confluence for me to take a trade. I only need two things. If you need 10, then you need 10. But I only need two, and I'm trusting it the way I feel like price is telling me that it wants to go. And that's what you're looking for. Confluence. All right, so let's go over the bread and butter, which is just the key takeaways of this session. I talked about finding the outside bar at the top of a move. And you want to make sure at the top of a move, you're finding a downtrend outside bar to play for a continuation to the downside. Also talked about finding the outside bar at the bottom of a down move. So you see prices in a strong down move. You get a green outside bar. Look for a continuation to play that back up to the upside. Also, use your fibs if a retracement presents itself. If you miss your entry and you start to see price pull back, place your fibs on there and see if you can catch a reaction off the fibs to get into that play. If it presents itself, a retracement doesn't have to present itself. If it does, take it. If it doesn't, move on to the next play. It's always another play. No need to force anything. And always wait for confluence. Regardless if you're taking this setup or any setup, you should have confluence before you get into a trade. You should always have something on the charts telling you this is the best move right here. This is the best play right here. This is a strong area. You should always have that before you take a trade. If you're not, you're setting yourself up for low probability setups. We only want the highest probability. So look for that confluence. All right, so we have come to the end of this session. I hope the information in this session has and will help assist you along your trading journey. If you have any questions, like I always say, drop it in the comment section, or you can feel free to DM me. If you have time, go back and look through my channel at all my fib videos and my last the 78 video that I was talking about earlier. Go ahead and take time and watch those videos. But until next time, I thank you guys for breaking bread with me. You guys be blessed.